Good morning, good afternoon, everybody, and thank you for being here today in this Q1 trading update of Avolta. We're going to make a presentation together with our CFO, Yves Gerster. I'm going to go straight to slide number 4 of our presentation. Q1, and we are also giving data on year-to-date April, has started very strongly. We have reported on currency exchange rate a turnover growth of 8.2% on the first quarter, with an organic of 5.3%. If we take into consideration that last year February was a leap year, the comparable growth on Q1 will be organically 6.5%. Our core turnover has also increased nicely in April. We already disclosed that there are some seasonality moves this year, Easter being in April instead of March. And as we already said, we believe that the year-to-date April is the right way to look the performance of the company. That will be even slightly better than Q1, with an 8.5% total growth at currency exchange rate and 5.7% organic. Without the leap year effect, the organic will be 6.6%. Very well in the long-term outlook of 5 to 7% per year. Core EBITDA has reached 196 million, which is an EBITDA margin of 16.3%, again on the top part of the range of our outlook, 37 basis points. Equity free cash flow is difficult to look at the first quarter because low season, no Easter. But if we take into consideration the seasonal effects, it's negative 104 million, but is in line with what you see on first quarter. Does not change our outlook for the year. Capital allocation, we will go on that a little bit later, but we confirm that our capital allocation remains unchanged, focus on deleveraging, and we continue to deleverage. If we compare the leverage of Q1 2025 versus the first quarter of last year, we went from 2.6 to 2.2 times net debt to leverage. We remain with a very strong liquidity, and we keep committed to the share buyback and the dividend distribution. Yesterday in the General Assembly it was approved a distribution of 1 Swiss franc per share. This is an increase of 43% year on year on the dividend. And of the 200 million share buyback we announced, we already bought 49 million Swiss francs in shares on the first quarter. I'll explain a little bit more that in detail, but we continue with the transformation of our shops, our restaurants, and also on the digital transformation. And we have robust business development in all the regions, Europe, Middle East, Africa, North America, Latin America, and Asia Pacific. If we go now to the next slide, we can see one of the strengths of Avolta, our diversification. Geographical diversification, business lines diversification with 1/3 to duty-free, 1/3 to duty-paid, 1/3 in food and beverage, and we can also see a good balance on channels and category mix. Thanks to this diversification, we have been able to report a very strong organic growth, like-for-like growth, and a strong growth despite one of the regions performing a little bit weaker. We all know that due to the general economic and financial situation in the US, the number of passengers in that part of the world are being flat during this year until April. With that flat passengers, we also report flattish sales, slightly positive if you take into consideration the change of scope, but largely flat. But despite that, and thanks to our strong diversification, we have shown well in the outlook the total performance. And we have received some questions over the last few hours, like we received. I mean, a few months back, people were worried about the Chinese consumption. Prior to that, the Ukraine-Russia war, also some concerns on the Middle East. And over, we keep reporting, and I think this is the 9th consecutive quarter where we report higher sales. We always, with a group as diverse and big as us, we will have different performance in different parts of the world. The important thing is that on the overall, we see a good strength. The combination of March and April, it shows a performance that is in line with year to date, and therefore we believe that the year to date is the best example in April on how we are performing as a group. If we move to the next slide, we can see that this performance is extremely strong in EMEA, and LATAM is strong in Asia Pacific, and as I just said, a little bit weaker in North America. If we look at the like for like, we have 8% in EMEA, plus 1.3 in North America, plus 3.4 in APAC, and 5.5 in Latin America. If we go to the next slide, we continue with a commercial and digital transformation. We have 32 new stores since our last reporting, including completely new concepts like premium tea in China, Hungry Club in Malaga. As you know, this is an F&B concept that we put inside the duty-free stores, so it's a hybrid concept. We continue with the cross promotion, so the combination on F&B and retail keeps yielding good results. We put also completely new concepts as part of this new focus on surprising the consumer and increasing the spend per passenger. We have, for example, 2 new Fragonard boutiques in Nice, Gourmand in Barcelona. We keep pushing very hard on the entertainment. We are every month more and more convinced that this combination of entertainment, new concepts, new shops, combination of food and beverage and retail is the way forward to consistently keep growing organically ahead of the passengers. Not forgetting also the digital and data transformation. Club Avolta continues to grow. We added another 1 million members in Q1. All the data, recruiting, spend per ticket, importance of the loyalty sales in the total have accelerated in Q1 25 versus Q4 24. So we continue going on the right direction. And we cannot underestimate the value we will have over time of this added intimacy with the loyal customers. We learn a lot about that, and we can keep improving our offering, our pricing, our promotions, the way we interact with consumers, thanks to this increased number of data. Gaming. Gaming is another aspect of the loyalty and in general of our interaction with passengers that is proving very interesting to increase the time we have relationship with those customers. If we move to the next slide in a second, I have a small video. You know, we always have 2 constants in these presentations, or 3. Consistent results, happiness for Football Club Barcelona, and a video. So I'm going to go now to the video, and I'll come back in a second. Now, our CFO is going to explain a little bit more detailed Q1 results. Thank you, Yves.
Thank you very much, Xavi, and good morning and good afternoon to everybody on the line. In the first quarter 2025, turnover came in at 3,050 million Swiss francs. That represents an organic growth of 5.3%. If you leave away the leap year effect of 2024, organic growth would have been 6.5%. That basically is at the upper end of our medium-term guidance of 5 to 7% growth on organic growth for the group. For EBITDA and also equity free cash flow, our other two main KPIs, I would like to go directly to the next slide, slide number 11. Core EBITDA came in at 196 million Swiss francs. That represents 6.4% EBITDA margin, an improvement of 37 basis points compared to previous year. Also that represents the upper end of the guidance of 20 to 40 basis points of our medium-term guidance. Equity free cash flow came in at minus 104 million in the first quarter this year versus the 80 million last year. It's a little bit softer, but there are two reasons for that. Number one, it's the typical seasonality we see with a negative first quarter in every single year. And number two, it's the Easter effect, which this year Easter happened in April versus last year where Easter happened already in Q1. So basically we build up inventory, buy ahead of the Easter effect when Easter only happens and we collect the money in April this year, so it's a certain delay. But those are just movements between the quarter. Overall, we have no implications in our expectations for the cash flow for this year and also not for our medium-term guidance. If I move on to the next slide, slide number 12, with the typical leverage and also the maturity profile. The company has deleveraged nicely year on year, coming from 2.55 in the first quarter, at the end of the first quarter 2024, to 2.18 in the first quarter, or at the end of the first quarter this year. So an improvement of close to 0.4 times year on year. If you're looking at the maturity profile, there is nothing specific new. It's a very diversified profile when you look at the different currencies, maturities, and also the fixed to floating rate debt mix we observed there. To the maturities in 2026, in the first and second quarter, the 500 million convertible and the 300 million Swiss franc bond, there we do plan to refinance them ahead. We will do that opportunistically. As you know, we have access to more than 2 billion of liquidity at the moment. So there's actually no requirement strictly to refinance that. Nevertheless, we are looking into that as we speak, and we plan to refinance it with a combination of cash on the balance sheet and potentially a new bond. So stay tuned for news there anytime soon. Having said that, I hand over back to Xavi.
If we go now to page 14, just to repeat once more, another quarter where we confirm our confidence in the full year outlook and on the outlook for the next few years. As we stated several times, we believe this company should be growing to between 5 and 7% organic growth, expanding EBITDA margin between 20 and 40 basis points, and expanding the equity free cash flow conversion between 100 and 150 basis points for every year. And we confirm that with the data we have so far, we believe that would also be the case for 2025. If we move to the next slide, again, is exactly the same slide we have put in the last few quarters. But I think it's important to reconfirm once more our capital allocation policy. Number one is to keep investing in the growth. We see a lot of opportunities in the commercial and digital transformation and on the business development. And from time to time, we might be addressing some bolt-on M&A to complement this growth only on an accretive manner and using debt if necessary. Second, to keep a very strong discipline on the balance sheet, targeting a leverage of 1.5 to 2 times, potentially going to 2.5 from time to time if that is needed. And last but not least, to focus on the return on shareholders in a combination of a progressive dividend, a third of our equity free cash flow on a yearly basis, and when needed, when there is excess cash, share buyback. We did one last year, we are doing one this year. And I think what is important, if you look at our quarterly trading update, is that everything that is in this page and everything that it was in the previous page is happening once more. If we go now to the last page, the conclusion, it's just to reconfirm what we keep saying. We are a strongly diversified company. We see strength quarter over quarter on our focus strategy, and we are delivering in all the key financial and commercial metrics. We are increasing sales, we are transforming the company digitally and physically, and we are delivering on the expansion of margins. And the strength of our diversified portfolio is seen for the last 3 years in a very strong manner. We always have something performing below expectations, but other things more than compensate for that. And our commitment as management team and also on the board of directors is to focus on value creation for the shareholders. And on that also we are delivering. So with that, I thank all the audience, especially the ones that are not only listening to the calls, but they are also nice customers of Avolta in any shop or restaurant around the world. I particularly thank the loyal members that have Club Avolta, and I cannot finish without thanking once more all the employees, all the team members across all our 5,200 points of sales. Thanks to you, we keep delivering strong results quarter after quarter, so you have my full appreciation. Thank you very much. Now we can open Q&A. Just a big thanks for everybody that attended this call and all your questions and interest. As Avolta management and all the team members, we are committed to our strategy and delivering shareholder value every quarter. Thank you for your attention.